While investors are always looking out for the next bullish comment about their stock holdings in order to keep their hopes alive, sometimes hearing from the not-so-bullish analysis may open investors to possible factors that they may be overlooking. Famous short seller Jim Chanos, who profited from the collapse of Enron some years ago, has been a huge Tesla bear, and now he's handing out free advice to Tesla bulls, stating that the good times are over for Tesla. Hey everyone, and welcome back to Tesla Tomorrow. American investment manager and founder of Chanos Associates, Jim Chanos, has previously predicted Tesla's growth and how it could slow as rivals catch up and it runs short of new customers. He described the car company as a hopes and dreams stock and warned that investors could face a reality check soon. His view comes amid a recent rally in Tesla's stock price. Tesla's share price has gone up so far in January after a nightmarish 2022 where the carmaker suffered a $700 billion wipeout. Tesla shares surged from a split-adjusted $30 at the start of 2020 to over $400 at their peak in November, and down again in 2022. However, several factors have caused the automaker to bounce back. Chanos warned that Tesla's valuation is largely based on built belief. According to him, Tesla's problem at the moment is that its CEO is preoccupied with Twitter, and it gives less time to the car company. Why has Jim Chanos said this? More details in this video, but before we get into it, if you like this type of content, don't forget to like and subscribe, and ring that notification bell to keep up to date on everything going on with Tesla. Jim Chanos is still shorting Tesla as the electric vehicle maker faces major pressure and margin pressures and increased competition. The famed short seller and founder of Chanos & Company said Tesla's biggest market, China, is now the weakest and it is going to hurt its margins. According to him, everybody forgets that Tesla lost money through 2019 building cars in the US, and it wasn't until they opened in Shanghai and that ramped up in a major way that the margins took off. He added that competition in the automaker industry is ramping up, and he thinks that it's really that the choices now are increasing. Chanos said that while the bears were wrong about competition, which took a long time to show up, he still thinks the competition is growing. Chanos is best known for predicting and profiting from the collapse of Enron in early 2000, and has said that Tesla reminds him of past high-flying stocks such as Cisco during the dot-com era. The Chanos & Company boss also pointed out that Tesla appears to earn the lion's share of its profits in China, yet the company's cars are very expensive for that market. There's mounting competition, and Tesla's risks are falling foul of the government, meaning its growth potential in China could be limited. He also highlighted a wider problem with companies today as well, noting that many have faulty business models, as they did during the dot-com bubble, and need rock-bottom interest rates to make money. The investor also outlined how the speculative excess in recent years could lead to changes. Jim Chanos predicted a crackdown on misleading accounting practices, plus stricter regulation of cryptocurrencies and non-fungible tokens with the goal of preventing further losses, thefts, and scams. And it gets even worse because Chanos has predicted the fall of Tesla profit margins, the entire cryptocurrency market, and the economy generally. In a previous interview, Chanos made some bold predictions regarding Tesla, crypto, and the economy generally. He emphasized a possible decline in Tesla's profit margins, the collapse of the cryptocurrency market, and up to a 55% collapse of the S&P. Chanos' interview is riddled with predictions, but the most notable has to be his predictions regarding Tesla. Foremost, the fund manager claimed that Tesla's current profit margins, which are above the industry average, will fall to meet the rest of the industry. Chanos also argued that Tesla is reaching the limits of demand for luxury vehicles. The market's future remains very much in the air as inflationary issues continue, yet the job market remains strong. However, while Jim Chanos has made very crucial points, Tesla's fundamentals cannot be ignored. The Tesla bull, Ross Gerber, is quite optimistic about Tesla's Cybertruck. Although Tesla is yet to start production of the Cybertruck, work is in top gear to get it ready for full-scale production, probably in 2023. Although most people are quite skeptical about the outlook of the Tesla Cybertruck, this is, in fact, one of the major selling points for the vehicle when it finally hits the market. Tesla Cybertruck is arguably going to be the most unique-looking vehicle to hit the road for a few decades, and therefore it will likely trigger curiosity, which will cause more people to be interested in Tesla. The Cybertruck is built for ultimate durability and passenger protection, and according to Musk, this vehicle will be waterproof enough to serve briefly as a boat, so it can cross rivers, lakes, and even seas that are reasonably calm. Ross believes that Tesla is set to record huge profits in 2023. He claims that there will be a massive step up in this year as new products are coming into the markets. And just like Ross, Steve Wesley also believes that Tesla's Cybertruck and Semitruck will record massive sales upon their release. Likewise, Gary Black believes that Tesla's Cybertruck will be a huge project for the car company. According to the Future Fund founder, the Cybertruck would be Tesla's most widely anticipated and important point-of-view vehicle, while the second highest priority for Tesla after the Cybertruck should be a sub-$35,000 car. It is also important to remember that Tesla may one day be the biggest company in the world, bigger than Apple and Saudi Aramco. After the review of the release of Tesla's third quarter earnings for 2022, Musk reassured investors of a promising Q4 for Tesla, adding that the car company is on the path to overtake leading global companies like Apple and Saudi Aramco. Musk stated that Tesla will, in the future, be worth more than both companies combined. He said, "I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. Well, that doesn't mean it will happen or that it will be easy. In fact, I think it will be very difficult and require a lot of work, some very creative new products, mass expansion, and as always, luck." At the moment, Tesla is still on track to selling more cars this year and to attain a 50% growth rate over the years. If Tesla further increases its car production and sales, and also expands its market globally, it could eventually reach its 50% growth. In October, Musk disclosed his belief that Tesla will, in the future, be bigger than Apple and oil giant Saudi Aramco. Although Musk added that even though the path to this valuation will be very difficult, he still believes that Tesla could be worth roughly twice the value of Saudi Aramco. Apple and Saudi Aramco have a combined market cap of around $4.4 trillion. So if Musk is right, then Tesla stock may be on its way to incredibly high numbers. Tesla bull Ron Barron also stated that he agrees with Musk's recent comments that Tesla could grow to be bigger than Apple and Saudi Aramco combined, which implies a valuation of more than $4 trillion. There is no doubt that EVs are here to stay, and so transitioning commercial and government vehicles from gas to electric stands will make a big impact. If vehicles such as police cars, fire trucks, mail trucks, school buses, city buses, and even construction equipment are made electric, then the global living condition could significantly improve. Huge vehicles like the Tesla Semi prove that they are better than their gas and diesel-powered counterparts, as they're cheaper to refuel, less expensive, and much easier to maintain, and exponentially better for the environment. This makes them an incredible choice for the future. Speaking of Musk's involvement with Tesla, Chanos said that not only did the new Twitter CEO pay far too much for the social media company, but Musk would also be distracted by the new project. It is important to note that while Jim Chanos does not believe that Tesla is anything more than a car company, Elon Musk has given investors the perfect image of Tesla that'll keep them continuously bullish on the EV maker. Tesla CEO Elon Musk has previously said that he feels Tesla is not just an electric car maker, but in the long term, people will think of Tesla as much more of an AI robotics firm. While describing the scenario, Chanos claimed that investors see Tesla as a company that it's not an energy company, a battery company, or even a robotics company. He further described the company's stock as a hopes and dreams stock. However, Musk has a contrary opinion, as he said during Tesla's Q1 earnings call in 2021. That the company is developing the strongest hardware and software AI teams in the world. According to him, Tesla appears to be doing things with self-driving that others cannot. And so by looking at the evolution of what technologies the automaker has developed, it is obvious that Tesla developed them in order to solve the problem of self-driving. What is your take on Chanos' comments on Tesla? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.